How do you actually make money investing? Come closer. Class is in session. About a month ago, I did a video that went kind of crazy on how to get started in investing. And the question that I got most in the comments was, okay, but how do I make money from this? There are two main ways that your investments can make money for you, and I'm going to break them down into real numbers so you can actually see it. Back to the wall events. I had no idea that this would be such a topic of discussion. Okay, so way number one is that the price of the stock goes up. This is called price appreciation. When you buy a basket of stocks, so say you bought VOO, which is a ETF or exchange traded fund, it's a basket of stocks that tracks the index or the list called the S&P 500. That just means that you bought a small piece of the top 500 performing companies in the US. When those companies grow, when they become more valuable, when they make more money, your share of the basket becomes more valuable too. Here's a concrete example. Back in 2016, VOO was trading around $200 a share. Today, it's over $600 a share. Same basket, more or less same companies. They rotate in and out depending on performance, but it's just worth a lot more now because the businesses inside the basket kept growing. You didn't have to do anything to earn this extra $400 per share. You simply had to own it. Now, in order to actually earn this money, you have to sell your investment. So that would mean you would have to go into your account, initiate a trade, and then they would deposit any profit back into your account. You can certainly do this at any time. It's your money, it's your investments, but I don't recommend it. And I'm going to get to why in just a second. But first, let's talk about the second most common way that you can earn money with your investments, and that is through dividends. The way to think about dividends is when a company makes money, as long as their expenses are less than the money that they brought in, they'll make a profit. Some companies and some funds pay out that profit in tiny little pieces every quarter or every month or every year, whatever schedule they set, to the investors that hold their stock. You can kind of think of it like a landlord collecting rent, except you're the landlord in this case. One of the ETFs that I mentioned in the last video, SCHD, they pay a quarterly dividend. So every quarter or every 3 months, you'll get a payout simply because you held that investment for that full quarter. And it can go one of two ways. You can either have it set to pay out to you as cash, or you can have it reinvested automatically so that it just purchases more of the investment for you. But it's kind of like the truest sense of passive income that we have because you literally didn't do anything to earn the money except hold the stock. And I always recommend reinvesting your dividends unless you're at a point where you're ready to maybe retire or you need the passive income for some reason. Because the way that it works is if you reinvest it, it buys you more shares, which then pays you more dividends the next quarter, which then buys you more shares. And it just becomes a snowball effect. And eventually it might get to the size where you can just live off the dividends that you receive. And a lot of investors do this. Let's go over why I don't recommend just selling your investments as soon as you make any money on price appreciation. So remember, that is when the stock price goes up. The reason for this is something called compound growth. And compounding is literally the entire game of investing. It's how you can make crazy amounts of money without having to actually contribute that much. So the way compounding works is that your money earns money. Well, what does that mean? Let's break that down. Anytime that you earn money on your investments, that money, also called a return, gets added to your balance. So then the next year, that larger balance earns a larger return, and so on and so forth. It just keeps going indefinitely. Let me show you what this looks like with real numbers. Let's say you start with $100 into VOO, and then every month you have enough money to contribute another $100. So including your initial investment, you would have a total of $1,300 at the end of the year. And in compound growth, you would have earned $10 for a total account balance of $1,310. Now, in year two, you still contribute $100 a month. So now the total contributions that you have put in for year one and year two is $2,500. And your total account balance will have grown to $2,641. Now, let's say that you do this for 30 years. So for 30 years, you contribute $100 a month. At the end of those 30 years, you would have contributed a total of $36,100 of your own money. The crazy part is that your account balance would be almost $200,000. The vast majority of that, over $163,000, would be completely because of compound growth. That's why I said it's like a snowball. The longer you leave your money in, the more compounding is going to help it grow. And that's on a 10% annualized return. Now, sometimes the market does really well, and it could have a 25% annual return. Sometimes it could have a negative 20% annual return. That's investing, that's the market. But over the long term, over 10, 20, 30 years, the US stock market has never not trended up and to the right, meaning you have never not earned money. You leave it in over a long period of time. So that's what I mean when I say your money earns money. It's how most people make their money in investing. So make your money work for you. Now compare that to keeping your money in just a checking or savings account at your local bank, where you're probably earning less than 1% on it. And inflation is averaging right now around 3.5 to 4% per year. You're essentially losing money every year to inflation. Checking and savings accounts are great places for money you need today or within the next 6 months, but they are not the place to keep your money if you want to actually make money long term. I hope that helped. Let me know in the comments if you have any questions. But those are the two main ways that people earn money through their investments. And if you want to keep learning more about personal finance and investing and how to grow real wealth over time, you should check out my free weekly newsletter. Just comment the word newsletter below and I'll send it to you.